that was the extreme fast move here. You know, that wasn't a prediction. That wasn't a prediction. Let me do that this way here. That wasn't a prediction that we will see a 10, 20 point or 30 point move here. We can't say that. It's not predictable, and you understand it. I'm sure you understand it totally, that this is not a prediction system. But it is a wonderful real-time indication what the underlying market, in this case S&P and the other side NQ as well, will do. It's wonderful, guys. Believe me, it's wonderful. So we are here. And what do we see? We see rising VXX, UVX, and the most interesting part, I think Ed mentioned that here. They are showing bearish divergence, Ed. Excellent, excellent. HYG showed at that time bearish divergence. And that point, when you want to understand your trading and what happens, you should, and therefore I will stress that tomorrow and the day after, and when we meet in the trading room, you will understand why I'm taking a long or short position, because bearish or bullish divergences are so dominant in this market now and then, not every day, but now and then, that I'm simply taking the trade. I'm taking the risk and hoping that the market will trade on. It will go in my direction for some points. Most likely it will go against me, testing the double top here, testing the double top, and then when something happens, what it did yesterday, give me 10 points back here. You see the divergences in H, Ed mentioned that in the chat, HYG. You see the divergences. It started to lift off in the volatility stocks, ETFs, and even the VIX. It's slower. It goes a little bit slower. Therefore, I like the VXX and the UVXY as a complementary charts, because they are moving. They are trading so high with so high volume. They are trading really hard on that, and that makes this simple understanding that we can use Bookmap for finer to tune our entries, and we can use gamma or institution levels to understand where the levels might be. We can use the Warner, the volatility, actively in our trading to control our underlying market. Not to control it. I don't find a better word, maybe, not to control, but to see what the underlying market will do. To see what the underlying market will do. And then with a fine-tuning, first of all, with an overview of the market and what the market is doing, and with a fine-tuning, we will try to find the sweet spots where we will get the best risk-reward ratio. Alexander, this is kinetic. Or, in other words, I have the X-feed as well here. This is the X-feed. Okay, guys, but that was the answer. How do I know if I want? How do I know whether to short or go short or take a position here at this point? I know that because I'm watching the volatility index, the Warners, the family of Warners here, and I'm watching the HYG, and I'm watching the SPY. So I know that beside the stop run, which I have discussed, or we have discussed with Raimo, that was the most important argument to short the market, because it's what's evident. But let's go back now to what I mentioned before let's go back to that what I mentioned before here. In the volatility indexes. You see, we are just, let me see the ES. I bet it's down. Yeah. Yeah. Institution level. You won't get these levels, never ever, for no money on this world to watch them. It's so important to have them. I know it's unbelievable. For the most of you, it's unbelievable, but it is as it is. Now, what happens in the Warners? At 7:06, that means 1:06 Eastern time, they started to rise. Started to rise, and got their point at 1:48. So when I see this, I'm very cautious with long positions. It is hard to say they will immediately drop down. But we have a kind of really weird and strange signals in the market. First of all, that was a great, yes, divergence happening. That was a great drop down. You see, you have to go long here. The question is, where do you join the market? We have to really fine tune, and that's what I'm saying. We have to fine tune when we are here. We have to fine tune our entries. So far we know there was nothing around here. We have support. We have had support. We have the divergence here as well. Maybe you can trade even the breakout here of 68 88. Because the market is dropping down very nicely here. The WIX is down, the UV, the VXX, UV is down. Although it's a little bit, it started to become a little bit weird here, a little bit uncomfortable, because you see that HY started to drop. They made a leg up here. That means volatility was higher, dropped again, gave some hope, and it's rising higher. This is not the common behavior of this market when you watch them. And if you do so, you will learn. You will learn the characteristics of these markets. You will be alerted. Okay, the market is going down. That means S&P is going up, and I bet the NQ is as well going up. Went up here at that point. But as I mentioned, it is not important at the beginning whether I see a stop run. That's nice, but I want to see this. I want to see the volatility dropping, and then I'm joining the market. I want to see volatility dropping. I want to see HRYG support my idea, although in this case was really, really reluctant to follow here. In this case, the second leg was most prominent, but they are really reluctant with it in the high yield bonds here. And but the first impression was right. When the market started, WIX started to fall, come down. So our task is to go long. Question now where we can discuss is where we do enter the market. Now here on the chart we have an exhaustion, we have a strong selling buying double bottom here, and then it lifts off here. We have green, and together with we have green. That means they are lifting the offer here. They are lifting the offer. We see the volatility dropping, and the market lifts off through all liquidity. Oh, Raymo, you should tell me that. Maybe you can send me an email. What are you using for divergences in NinjaTrader? Let me know that. Yes, okay. I would like to finish the day for today and leave you alone with your thoughts, with your impressions of these 2 days. And I will start to discuss the rest of the presentation and how to fine-tune the system that will make you profitable trader. I will talk to you tomorrow about this, the possibilities we have as traders in this market, and that is works for ES, that works for NQ. For stock markets as well, we say we don't have the volatilities, but as well we should have a look at them. And we will discuss that. I think you are extremely quiet right now in the room. I mean, you have been all the time extremely quiet. And let me speak and let me preach what I wanted to say. I would like to know your thoughts, and every discussion is welcome. So we will discuss tomorrow this stuff. I don't know why. Yes, you see as well here on the other side, on the SPY and the WIX, if they are immediately at the beginning start to rise, then you have to sell. So these are the correlations. What we are watching and what we should know is we need a SPY. I recommend the VIX, VXX, UVXY. Then we have the cash market as well. VX volatility indices are inverse markets, and we are using, or I'm using, the HYG for the S&P. So, and that build and gives me a comprehensive and holistic overview over the market. I can say to nearly every point of the day, it's a little bit too strong what I'm saying, but I can tell you maybe most time of the day what the market will do. The question is not how to enter, how to manage your position. What is your risk-reward ratio? What is your risk profile, for example? That depends on every one of you. You must answer that, and then go. Okay, thank you, Raimo. Okay, guys, any questions so far? We are almost done. We are almost done with the theory. We will need a little bit more tomorrow, but then let's do a practical session. Let's see, where's the ES right now trading? I don't know. Oh.
Voltaire, can you about chart it's a black chart from NinjaTrader. If I do on the interactive or on the FinFish, because I'm not using
You can use that,
NinjaTrader.
Levi, you can use that with, you're welcome, Karen. So you can use any chart system you have. It depends on the data feed. So I'm using Kinetic here as well. I'm using that on the Bookmap as well. I'm using Kinetic and I'm paying for the data feed of, I think it's Nicey, not sure. You can use it with Sierra chart. You can use it with Thinkorswim. Whatever chart you have, it depends simply on the data feed.
I have Interactive level 3.
Interactive brokers. I didn't understand. Interactive brokers.
Yes.
No, you can't. I'm not sure. I don't know. I have, by the way, my broker is as well Interactive Brokers. But I'm not sure if this is working with Interactive Brokers because I'm using, I have the NinjaTrader. You can, by the way, that works with NinjaTrader, the free version. NinjaTrader has several versions. If you are not trading through NinjaTrader, then you can simply download NinjaTrader version 8 and install it and run it. It works wonderful. So the only point is you need the data feed for the NYSE and for the NASDAQ, for the NYSE and CBOE. Excuse me, it's CBOE, not NYSE. It's CBOE. It is CBOE, and if you have this stuff with CBOE, the data feed, you can add it to the free version of NinjaTrader. Oh, TradingView.com has auto symbols too, but have to pay for real-time data. Okay, guys. Myron, which underline it is QQQ? It is as well as I told. Go into the documentation. It's what is this? FQQ and TQQ, I think. Please, Myron, go to the documentation and see there's an opposite of the SPY, which is QQQ, and there's an opposite of VXX and UVXY. I haven't had a chance to look at it, but it doesn't matter. It's all there. Everything is there. For everyone who wants the data, it's the CBOE data. And if you want, I strongly recommend, or otherwise, if you don't want to do this, go to the XFeed, subscribe to the XFeed, you will get HYG, you will get QQQ, you will get VXX, the SPY, and the VIX future. I don't have them on the chart because they are extremely slow. You have to go to bar chart or stock tradingview.com to find symbols for VIX future as well. I mean, or barchart.com, you will find the VIX futures, the label or symbol, and you can add them on your Bookmap chart, which is quite interesting because if you have several screens, you can link the charts with the symbol here, synchronized charts, and then you will see immediately what happens. So my chart is showing on the UVXI at exactly 7 p.m. That means 1 p.m. Eastern time. And where is the X? That means, so it's rising, started to rise here, and we have a nice institutional level here. You see how perfect it works, far better than spot gamma levels. And then it's simply amazing, I know, and it went to the next institution level here. It's unbelievable, guys. I know it's unbelievable. You won't believe that, but it works really. So the XV, where do I get the Bookmap back? Yes, no. When you are subscribed to Bookmap, when you are subscribed to Bookmap, you need to go to your Bookmap portal. You need to your Bookmap portal, and in your Bookmap portal you can subscribe to the X feed and the different data feeds they're offering. Historical data, the X feed, I can't even remember what it is. So great, guys. It was an exciting day. It was a demanding day. It was a challenging day for all of you. I know that. And I think that's the best way to stop it here. Digest this information until tomorrow. Digest it. Think about that. Let's start tomorrow discussing this concept. I will show you some other points which you can use in the strategy, the micro view. But together with the macro view of the market and the micro view, you will start to be profitable. Believe me. I have another motivation for you tomorrow. And okay, stay tuned and we talk tomorrow, okay?